Hello everybody, Houston here. I hope you guys are doing well, having a great day or a great night. And let's jump into the charts. So as always, bigger picture first. Let's take a look on volume. Okay, so we still don't have enough volume to sustain a reversal here. We are presuming we are going to have a reversal from this point. So not a big deal so far. Okay, and also just a second. Okay, let's take a look on OBV as well. So we don't have a bullish divergence. Let me take a closer look. We have a divergence here from this point to this point, but it's not a big deal, but it's like something is cooking. Okay, so we will watch out. But the last two guys here are very weak. Okay, so not enough to keep pushing. And also we have this last candle here for this month. It's bearish. Okay, it's not bullish because we been rejected more than 50% already since 192. Okay, so now not bullish. And another thing that I mentioned before, and we can take a look again. Let me see if I can put it in another way. So this is a very aggressive move from the short sellers. And what is interesting here, we still don't have a high, okay? Because at this point, it would be nice to see a move like this. Another lower high, okay, just to show some strength and beat this guy. So then we will look for the bullish continuation or a different perspective, because so far we still don't have enough firepower, let's say. So let's jump into the weekly. Oh, and before I continue, I'm going to show you something, because some people are tagging me on other people's charts about possible scenarios, but they are not going to play out. Well, not at least all of them, because for this reason, let me see if I can draw it here properly. So let me back to the monthly. Okay, so this is what we have. Okay, so this is a bear market. No news here. So what some people are doing, they are doing this. So this is the stochastic oscillator, okay, that some people like to use. And basically what they do is this: every time we go into a bear cross, they don't say anything, okay, but they expect for a drop. But what happens when we have a bull cross? They say, well, this is it, now we are going to new highs, this is it, this is a reversal, and then we will go, and etc, etc, etc. So okay, so why it doesn't work, why it doesn't happen like this? Because again, this is, oops, just a second. Okay, so this is a bear market, okay, which means lower highs, and higher lows, correct? Okay, perfect. So what they say, this move here, this next move, let me delete this one. So they say this cross here, it's a reversal cross. So they expect new highs, okay? So what we end up is this, sometimes in the halfway, but just for the sake of the example, let's make it to above the purple range, okay? And then we have like this. So they presume this move here will beat all the previous highs, or at least the close ones. But it doesn't happen. We end up with a lower high again. And that's when people who use oscillators lose money, end up wrong on their analysis based on oscillators. Okay, so this is just for you guys to have an idea. One of the reasons I don't use such things, okay? And just for the sake of this example, I'm going to show you what happens for the other scenario, okay? So this is a bull market where we have high, higher low, higher high, higher low, higher high, higher low, higher high. What happens here, when we have the bull cross, we are around this level here, okay? But you can use this in your trading setup because the range for your trade will be out from the average move before going into our direction, okay? I tried this method in the past, and in multiple charts, multiple assets, and it doesn't work properly, okay? Otherwise everybody would be making money and would be right as well on their analysis. And so here so again, so this guy here would be close to this here, this guy here would be close to this one, and then we keep going, okay? Because the range here is always the same, right? And we can still stay here for like I don't remember, maybe 2 weeks, 1 week, three weeks, and doesn't help at all, okay? So just a waste of time. And I am showing this because some friends were asking about this, and let's keep going. So let's jump into the weekly. Okay, so we have our bear candle here. Let's look for any divergence here first. Okay, so the bears, they don't have like a lot of firepower and strength, but what we can see here, the buyers, they are looking for the promotion or like a discount, because we always find value near the lows. Okay, so a thing to watch out. And now let's look for any divergence here. Okay, we can use this one. Yes, there is something here, but it's not like a too much aggressive. It's lacking something else. And here as well, what we can see again is another bear flag. Okay, let me take a zoom. So this is a bear flag, which may lead to another low or even a new low. Okay, because the payoff here can be around 50%, but we still don't know. We still don't have the technical evidence for such. Okay, because if we end up with 50% payoff here, 192, 115. Okay, so 145, 150, more or less, a little here, okay? And this would still give us nothing, this range here, for a 50% payoff. So not the best place for longs, or maybe the buyers are still looking for another discount. And remember, this is for entertainment purposes only, okay? This is not financial advice. So now let's take a look on the 3 days. Okay, so we had this strong attempt here, but faded. And let's see which level we have here. Okay, 185, 13, 14, 5. Okay, so perhaps we were chasing the gap, only to fill the gap before keep going down. Okay, it's a possible scenario due to this rejection here. Okay, because okay, nothing to see here. I will take out LBV. So we had this power candle, but right after a full shadow on the green candle, okay, which was a red flag, and then a tombstone doji, which was another red flag, and then 75% plus rejection on the last attempt, which filled the gap, as you guys can see here. And right now we're still trading in the range of the previous red candle. I'm going to give you a different perspective. Can you guys see? This is called inside bar trading. Okay, we're still trading inside the range of a bear candle. Okay, so it's not bullish at all. Okay, and let's go to the daily. Okay, so here it's more evident. Let's take a look first on these bullish spikes here. I'm going to use a line for a better sight. Just a second. Okay, so let me take out these guys. Okay, so as we can see, the first two are probably based on FOMO. Okay, and why I'm saying this? Because the buyers faded right after. So spike on volume, the buyers leave. Just a second, please. Okay, so huge spike in volume, price surge, no bullish continuation at all in both scenarios. Okay, so it looks like a trap. Okay, and this other guy here. Now let me take out the bar. Okay, so this one here, we saw this huge rejection, which is bearish. So this can be another trap. Okay, that's something that we will look for. Let's take a look on BV. Okay, OBV is not fantastic, but we have a clear divergence here. Just a second. Okay, so as you guys can see, the buyer's volume, let me use a straight line. The buyer's volume, or the buyer's pressure, is raising, and we have this divergence here. It's not the biggest one out there, but it's very significant. and that's something for you to look for. Okay, so again, price going down, new low, buyer's pressure going up. Okay, so it's like a green flag, but it's not everything yet. Okay, because we are looking for clues. And here our bear flag clear, and it's even it's like a expanding channel, like a megaphone. The reason this kind of structures develop, it's because the nature haven't changed, it's still bearish since the last high, and channels like this, symmetrical channels, it's like they have the same amount of volume. Okay, and channels like this one, expanding channels, it's when the volume and volatility start to increase. Okay, so same nature, different behavior. Okay, that's what we have here. And let's take a look on Fibonacci as well again. So I believe we made it to the golden. Let's take a look. Yes, we made it, and we end up rejected again. So golden triggered. We have a trigger on the 50, but we end up with this strong rejection. But even though it's still possible for this guy here to make it, for example, to the 60. Okay, I'm not saying we are going to make, I'm saying it is possible to happen. Okay, because despite the bearish nature and the structure, this is also a mirrored pattern. Okay, that's something I'm working on my theory, the mirrored trend. And so let's say for this example we go to 780.60. Okay, would still be bearish, the nature won't be affected, but if we make it, it would be great, because the bears will need more firepower to make their move. Okay, and we already saw there is people interested on this level, and if the bulls are going to defend, they will look for a higher low, right, which can be around this level here. So from the perspective of odds, let's say we end up with a scenario like this, not the best one, because for a reversal on W shape, you would need like a flat resistance on top. Okay, like a neckline, but we still don't have any indication that we are going to see it, but just a possible scenario, right? Because we are in a bottom, so we are looking for bottom reversal structures. Okay, and not the other way. So let's take a look on the 4 hours. Just a second. Okay, so as you guys can see, right after the spike, let me see if I can show you in a different perspective. Okay, think like this: who made this attempt here? Okay, and now ask you this question: why we made it just a little above 190, which is a key level? And now ask yourself this: uh, by any chance they are triggering those levels for later continuation? So there is a few questions that you have to ask yourself in order to also understand the price behavior better. Okay, because we know the market makers use specific tools and specific numbers, and every tool and every number has a purpose. Okay, nothing is chaotic or randomic. No, there is a purpose for everything, every single digit. Okay, so now let's take a look on the 2 hours. Okay, not a big deal. Just for, let me take a look on the 12 hours, just for a second. Okay, we have a bearish abandoned baby here. Not a big deal at all. Okay, so let's go to the 1 hour. Okay, so what I'm going to do now is to show you the same thing that we just saw for the bigger picture, and now we are going to see it again in the small picture. Okay, so this is our range for our Fibonacci, and we are above 38 maybe. Let's see. Okay, so here we end up rejected at 38 again. Just a second, please. Sorry, so someone was calling. What a time. Sorry. Okay, so again, we end up rejected here at the golden, but the only good news here is that we have a trigger for a possible continuation. Okay, I'm not saying we are going through, but it's possible. Okay, so and again, this is nothing bullish at all. Not bullish at all. Sorry. As you guys can see, this was a almost 100% retrace. Almost like 98 to 90%. So all the way bearish. Okay. And now let's take a closer look. Small power candle. Let's take a look on the 15. Okay, so not a big deal at all, but again, this guy here, remember this structure here. Just a second. Okay, so is that structure similar to this one? Yes, they are the same because they are not bullish. Okay, it's not because we are going up that's bullish. Okay, as you guys can see here, going up, not bullish, going up, not bullish, not bullish, not bullish. Okay, so it's all about the nature and the behavior of the pattern. Okay, so that's a different perspective how to look at it, and I believe this is it for now. I believe we covered many aspects of the price behavior in the short time frame, and let's keep looking for it in this week. Maybe we end up with something different, we don't know yet, but we will keep watch out. Okay, so let's take a look here on the chat. How to draw step by step. Hey buddy, how do I view or join? Oh, you can send me a message on Twitter and I will answer you. I will reach you back. Hello, John. How are you doing, my friend? Answer your phone. Yeah, sorry for that. Okay, guys, so this is it for now. Thank you for your time, for your patience. Don't forget to like, subscribe, and share with your friends. I'm exchanging my knowledge for your time, okay? We are exchanging here. So thanks again. I will see you guys soon. Maybe I will go with another live in a few minutes. I will see you guys soon. Thanks again.